Happy December 10. My name's Jessica Amelia, a market strategist here with Moomoo. It's great to have your company as always. So we're seeing stocks on Wall Street close within a whisker of record all-time highs. Here's what you need to know. The S&P 500 closed 1.1% under its record all-time high. The pin-up NASDAQ 100 index is just 2% off its record all-time high, but the showstopper was the small cap index that we track via the Russell 2000. That hit a record all-time high. And this is all ahead of the Fed's expected rate cut of 0.25%. So what made waves overnight? So silver hit a brand new record all-time high of $60.59 US an ounce. It's gained 33% from the October low. Gold in that time has only managed to rise 8%. So the market is really telling you here, hey, silver is the preferred precious metal winner, given it's going to benefit from strong industrial demand and, of course, the build out of AI infrastructure. That's something for you to think about. These tailwinds are probably going to last years to come. In the Asian Pacific region, though, we are seeing Hong Kong's market, the Hong Kong Hang Seng. That's got some ways to go to get back to its record. It's up about, well, it's 7% away from its record all-time high, but it has produced a better return so far this year to date. It's up about 25%. Let's get to the focus of the day. That is, where are we spending money this holiday season? Let's start in the US. Americans are expected to spend a record $1 trillion on holiday spend this year. The average family in the US is expected to spend $900. That's the highest they're expected to spend in about 23 years. And jobless claims, we call that the unemployment rate, they're at their weakest since September 2022. What is this saying, this picture? It's basically saying, yep, consumers have got jobs and they're spending a record amount. Down under here in Australia, similar tunes are being played out, not by as great as magnitude though. Aussies are expected to spend $828 on average this holiday period. Spending is ranging from spending on decorations, food and travel, and all in all, our total expenditure in this period in Australia expected to hit $28.4 billion. And hey, we've got a low jobless rate too. The jobless rate or unemployment rate is at 4.3%. That's near levels that we last saw in 2021. So, yep, consumers in Australia, they've got jobs and they're spending a record amount too. As always, I like to have a look at what the market is telling us, and this will give us a really good indication of what stocks could do well. The market is always a really good future indicator because the market is forward looking and it's saying, hey, what is going to do well over the coming period? So right now, as we stand, over the last 20 days, consumer-facing stocks in the S&P 500 are making mega gains again from these mega tailwinds, these mega, billions of dollars that are being expected to be spent on these consumer-facing stocks throughout this period. They're just calling out a couple. The best performing stock in the S&P 500 over the last 20 days is Deckers, up 26%. In second place, Dollar General, up 25%, and the airline Southwest Air, up 17%. And if we think about airlines, we spoke about them recently, and I said that they should be on your radar. And let's think about one that's still in the limelight in the airlines, and that's Delta. It's just a wink away from its highest level in history. Down under, what stocks are ruling the roost and doing well? And what is the market telling us what could do well over the coming holiday period? Domino's, that's the best performer. Apparently, we are expected to be eating lots of pizza this Christmas period. Domino's pizza shares are up 18%. Web travel, no surprise, up 17%, and Flight Centre up 13%. So let's bring in to the fold now stocks to add to your watch list. Let's kick off with Flight Centre. So Flight Centre shares have been on a tear. They're up 19% in the past month. And this is on the back of a couple of things, not only expected spending throughout this period, but they've also guided for a strong year ahead. So their earnings recently guided for stronger profit, and everyone likes that. That's on the back of higher expectations for revenue. So the company guided for a strong half year, and of course, the stronger next 12 months. They see a jump in net profit after tax of 5 to 17%, pretty broad, but the market actually sees gross profit growing at 76%. So this year and next year, and that's if we look at the profit margin. So the market is really excited about the things that are coming for Flight Centre. They're doing what we want to see from a business as well. They're gaining new clients and they're also building out stronger profits in the Asian region as well. And so for this reason, the stock has entered, perhaps you could say, an upgrade cycle. And when a stock enters an upgrade cycle, their shares generally rally. And that's another reason why their shares are pushing on up. Canaccord, one of those analysts or investment banks, if you want to call it that recently upgraded Flight Centre. JP Morgan and Citigroup also recently became substantial holders of Flight Centre as well. And the stock has got a buy rating by analysts. The average price target implies 15% upside from where it closed yesterday. And given that their shares are down 18% year to date, and if you believe the analyst buy rating, you might be thinking that this stock looks like a buying opportunity. Speaking about buying opportunities, Nvidia's H200s have finally been approved to sell in China. The US government has allowed this to happen, but they are saying, hey, we want to take 25% of the revenue that you make in China. Thanks very much. Of course, that's Trump's decision. Now, this is a huge win. I want you to consider this. This is a huge win for Nvidia, but also China. Why is that? Well, the H200 chip is the most powerful chip in the world. It's actually the best chip that China is currently accessing, and it's also well suited for inference and serving AI queries on trained models. So this is also a win for China's AI development, particularly in inference and training and learning large language models. So this basically could allow Chinese companies to deliver globally competitive AI services at lower costs. So that's something for you to consider, and why I also think you should be watching companies in Hong Kong's Hang Seng. Also consider, if you look at the rival Huawei AI chip, they are currently being used, but they do offer less memory bandwidth and less total processing performance compared to Nvidia. Analysts on Wall Street see Nvidia's shares rising about 38% over the next 12 months. The average price target at $255.54. So plenty of upside if you believe the average analyst over a 1 year period. Last but not least, a stock to add to your watch list is Applovin. Applovin, they get a special mention today because they were the best performer in the NASDAQ 100 overnight. Their shares jumped up 5% for a couple reasons, but they've been doing really well of late. They're up almost 40% in almost the last 3 weeks. So what happened last night was they spoke at an investor conference, and always management, when they get up and they talk about their company, of course they're going to say great things. Wouldn't you? If you ran your own company, you probably would. But what happened was the company came out saying that their Axon, that basically one of their flagship products, their self-serve ad targeting platform that launched recently, it's going to fast track their sales. It's particularly being used with web developers, and Wall Street analysts really love this. And that's why you saw a lot of excitement and a lot of buying activity in the stock overnight. They also recently delivered really good results, and they also delivered a new round of investor conferences, basically coming out saying that their mobile gaming and ad tech growth is pretty strong. Heck, they call it robust. The company, of course, offers AI-powered advertising solutions. It basically makes it a lot easier for businesses to reach customers that they want. So that's why Citi, UBS, reinforce the stock as a buy overnight. The average price targets are around $800, and that implies about 10% upside from last night's close. The stock has done really well of late. It's up about 119% this year to date. It's near its record all-time high. Plenty to watch and consider.